Good afternoon, traders. This is Tony D from easyMarkets in the Sydney dealing room. Dramatic moves overnight. You got some key day reversals. You got the Aussie dollar making fresh highs after what would ostensibly be called weak unemployment numbers. Didn't stop the Aussie rally though until later in the US session, where we got a fresh sharp leg down. Lots of concern about new sanctions on Russia. Risk off 300 points down on the Dow. And the Aussie dollar got crunched. So it's if you look at the daily chart, what we're looking at here is that the market has been in waves of downward selling in the past few months, but then consolidation periods and bounces, and that consolidation period and bounce that we got up to the 200-day moving average, which comes in around about 78.20, was tested yesterday, and then he got the the fresh high, then the fresh low. That's about as bearish signal you can get in the FX market. So the way down is on the cards at the moment. The target will be the 76.50 to begin with, but definitely in longer term time frame, the next leg can get down towards the 75 level, especially if China and US kick off again. There seems to be a background as well, rumblings about China banning a few increasing costs for sorghum ships, and some US ships that were en route have turned around now, according to latest satellite. So it's there's a fair bit happening here. Also, there's a lot of political uncertainty in America. Trump is and Comey and Trump's lawyer. The headlines are getting a little bit more aggressive and sharper as the days go on here, and there could be more uncertainty over the weekend. So. It's definitely not the same as earlier, where risk on was happening with strong stocks. Some of the earnings last night were a little off as well, so there is some concern that perhaps the recovery isn't going to be as smooth as it was looking like in the past week. So definitely back on the more defensive stance today. We'll see if it gets some follow through. It's very cautious, definitely not the sort of situation where you want to go straight back into the cauldron, unless you get some good news out to sort of taper some of this bad news that's sort of hit us all at once in the last 24 hours. In terms of big moves in the commodity markets, oil jumped over 3%, aluminium up over 10%, and nickel up over 10%. The second biggest aluminium producer in the world was part of the sanctions that US put on. And they have investments all over the world, including Australia, and so ostensibly you think higher commodities would be good for the Australian dollar, but just not when it's like this. So the market is very, very cautious on how it's going to affect it, and they're still doing the accounting on how it's going to be playing out now, and where the extra demand and supply is going to be filled by which countries if Russia is taken out of this situation. In terms of the stock market pullback, hasn't got too serious just yet. There's still some room here, get down towards that low 24,000 level. So another 600 points or so before we get to territory where the traders will be asking themselves how low we're going to go. But definitely something to keep an eye on. Dollar index has taken advantage of the risk-off move to get back above 89, moving towards 89.60. Now 90 is the key level on the top side. Failed last few attempts. If we can break and hold above 90, then we can talk about US dollar strength against everything. And finally, the last thing we'll talk briefly on is the other big mover of the day was the pound. Carney came out, talked about the weak CPI numbers, and noted that took a lot of the wind out of the sails about the expectations of a May rate hike. Definitely much more of a 50-50 now. And we do get another Bank of England speaker tonight, who is a renowned hawk, and his commentary is going to be a bit more important. But when it comes to, has the damage been done already from Carney? Yeah, it's it's more likely that the bank's going to sit on the sidelines and wait to see if inflation is going to continue to drop as fast as it is, then drop the hammer and raise rates next month with that question mark still in the background. So the pound obviously has been tremendously hurt by this, because the rate hikes were one of the legs that was helping the pound recovery. Now the sharp fall so far, we're still above 140, but we're definitely getting down close to it. And there's a fair bit of room here to move underneath 140 towards those pre-Brexit deal levels of 137. And so that's on the cards there for the pound. In the next day, we'll see what happens at 140 if we can break that cleanly today, but it's got some momentum behind it, so It's going to take some very hawkish comments from the Bank of England Haldoon tonight to stop this market from the sort of free fall frenzy that we've had in the last 2 days. Alright guys, have a great weekend. We'll be back on Monday with another update. If you want to have a chat with us today, give us a call on numbers below. If you're not a member of the easyMarkets dealing room, you can become a member, get a dealer assigned to you from the link below as well.